Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm looking forward to this episode today. There's a lot to cover that's been in the headlines recently related to tax and accounting news for Web3. So I want to get right into it here. Let me start by sharing my screen for video viewers. For people that are listening across podcast channels, this is an audio and video presentation that we hold here. Okay. So firstly, if you see here, we are hosting a webinar to go over Form 1099 DA. Now, I want to discuss the Form 1099 DA here briefly today, but we'll be going over this form line by line, along with, all of the tax implications, potential issues, and potential changes with this form on May 30th. So you can go over to my LinkedIn page and sign up for this webinar here. Additionally, we will be bringing on a guest on the Financial Frontier on May 13th, the founder of Actual, Akit Nana. We had a great conversation, and he was able to give some great insights regarding the payment landscape for Web3, how that integrates in with accounting systems, and what the technology stack should look like for Web3 companies from that perspective. So I think this is a great conversation. This will be on May 13th. So for this, you can also go over to LinkedIn to sign up, or this will be posted across Spotify, SoundCloud, and other podcast platforms. So let's get right into it here. Firstly, the first headline of the day is about the broker reporting requirements, because this has been some pretty big news that we've seen lately. IRS unveils a form your broker may send next year to report your crypto moves. So here they're referencing the 1099 DA, which I want to point out isn't finished yet, as they say here. The current draft of the 1099 DA isn't reflective of any of the comments that they received during the comment period when they first issued the proposed broker regulations. So, we're going to have to see what changes come of it. If you look at the form itself, let me call that up here. Let me make sure this is still sharing. There's some interesting things. The first one, obviously, that everyone's talking about, and that we're going to have to see if this stays the same, is who's required to report. We have kiosk operators, digital asset payment processors, hosted wallet, on-hosted wallet. So on-hosted wallet is really the point of contrition here. This represents anyone that's effectuating a transfer. So this is going to impact a lot of people that aren't necessarily custodying funds and controlling the assets of taxpayers, but they're still going to have all these reporting requirements. Think, like a Uniswap, where it's a decentralized exchange, but they control their front end website and the fees. This is going to create reporting requirements for companies like that. Now, that's where the pushback is in the comments, basically industry-wide, that the IRS received regarding these proposed regulations. So we're going to have to see if they adjust anything on this form related to that. What I would like to see is possibly the on-hosted wallet providers gets rolled out at a later date. And right now we focus is on hosted wallet providers. But as it stands right now, as you can see, on-hosted wallet providers are something that's included here. There's some other interesting things here. But like I said, we're going to do a whole webinar on this to go over it. If you look down here, though, they're basically going to be looking for a whole audit trail for every transaction. Transfer in, transfer out, digital asset addresses, number of units transferred. So, this is going to be comprehensive in the data that it collects, but it's going to be extremely high volume in terms of the number of forms that the IRS is going to receive. So in that regard, it's really going to be unprecedented. So we're going to do a webinar to go over this in deep detail and go over a lot of the tax implications, potential errors when it comes to cost basis tracking, and this form in general at a much more detailed level. So switching gears here, the next headline is Canada has been the latest country that we've seen announce that they're going to begin implementing the International Crypto Tax Reporting Standard. So here they're talking about the OECD standard, and there's 46 other countries involved with this. Canada is just the latest country. So, you can see that there's a tax reporting framework that's being formed and being implemented now across the country, and there's cooperation across a lot of these countries. So, according to the supplement budget for the 2024 annual budget, Canada expects to apply the International Crypto Asset Reporting Framework for taxation by 2026. So Canada's getting an early start on this, as this article says. There will be about 47 countries on this by 2027. So, similar to the 1099 DA requirements you see here, crypto asset service providers would be required to obtain and report information on each of their customers' name, address, date of birth, jurisdiction of residence, taxpayer identification number. So this is where, as this says here, this is in 47 different countries, and this is going to, collect information and require third-party reporting on a lot of crypto transactions, similar to what we're seeing here in the United States with the 1099 DA to a degree. So, these types of standards are getting rolled out worldwide right now. Similarly, the tax focus overall from an enforcement standpoint is picking up steam across the world. We see South Korea looks to upgrade status of crypto crime unit. So they had a temporary unit, and it's reportedly being transformed into a permanent department as enforcement actions rise dramatically in South Korea. So they're seeing an uptick in crypto tax evasion cases that they're planning to pursue more, and that's something that we're also seeing here in the United States with the IRS. We're starting to see the Justice Department pursue more tax evasion cases. So now this temporary unit that they have is going to go permanent. So it appears that they're planning to enforce a lot more cases and crimes related to crypto and related to tax evasion. So the permanent department would interact with domestic and international government agencies on an equal footing, and could expect to see increasing caseload after the Virtual Asset User Protection Act comes into effect in July. That act foresees penalties of up to life imprisonment for crypto-related crimes involving more than $3.6 million. So another interesting point here is that many of these agencies interact domestic and international. So when we see, someone may be operating on an exchange or on a hosted wallet provider that is maybe in Canada, or maybe it's in South Korea, or it's in another country, that data, oftentimes there's going to be agreements in place that have already been established, and probably, more in the future, where that information is getting shared between countries and between government agencies. And what that allows them to do is piece together more of this information to put together a complete profile on a taxpayer who may be underreporting. So I think this is interesting that we're seeing this uptick in crypto tax enforcement across the world. So next up here, if you've been following crypto taxes for a while, you've probably seen this one before. So they're Toomey and Cinema Eye exempting small crypto purchases from capital gains. So two senators have basically introduced legislation to exempt small crypto purchases from taxable gains. So in this bill specifically, anything less than $50 or personal transactions that have gains below $50 would not be subject to capital gains. This type of bill has been pushed for years now, and it hasn't gotten passed. And I would like to see it get passed. One of the main use cases for crypto is to use it as a form of payment. And right now, the tax system is extremely prohibitive for any taxpayer that does so. In fact, when I'm speaking with clients at Camuso CPA, I tell them not to use their assets that are in their personal portfolios to go out and make purchases and make payments, because what that's going to do is complicate your accounting. Because right now, since there isn't any de minimis threshold, if you go and use crypto to purchase a pack of gum at the grocery store, that's going to be a taxable event that you have to account for and claim regardless of the amount of gain. So this would remove a lot of that friction, and for small purchases, it wouldn't require people to do that. Now, again, we've seen this get pushed before, and it hasn't gotten through. But I would like to see this get pushed, because it can make it a lot easier on taxpayers if they do want to use crypto as a form of payment. So this quote here says, "We're protecting Arizonians from surprise taxes on everyday digital payments. So as use of digital currencies increase, Arizonians can keep more of their money." And that's just it. If we're going to see wider adoption of crypto, more and more people are going to be using it, and they are going to be using it for purchases. A lot of this is going to come out as a surprise when people realize they have to go and claim, purchasing a pack of gum on their tax return. So we'll be watching this closely to see if this finally gets pushed through. I think it makes sense, but only time will tell. So this was big news. We see more action from the Justice Department related to cryptocurrency tax cases, this time with Richard Vare, who was a prominent figure when it comes to the history of Bitcoin and a lot of the controversy back in the day related to scaling Bitcoin. So he's actually known as Bitcoin Jesus, evaded nearly 50 they're alleging has evaded nearly 50 million in taxes. So basically what happened with Roger Ver is, he was holding a lot of Bitcoin, obviously. And he eventually moved out of the United States and renounced his citizenship. And what the Justice Department is claiming is that he didn't pay his exit tax, or he did pay his exit tax, but he didn't claim all of his assets when he made that claim. So because he underreported the Bitcoin that he owned, then the exit tax that he paid, he underpaid significantly by, as they're claiming here, 50 million in taxes. So yeah, he moved to St. Kitts, renounced his citizenship, and through a process of expiration, and he was required under U.S. law to file tax returns that reported capital gains for the constructive sale of his worldwide assets, including Bitcoin, at the fair market value. So what they mean is basically, like, if you're going to go through this process, you have to pay an exit tax on all of your assets based off of the value. So they're alleging he owned 131,000 Bitcoin. And that his companies owned another 73,000 Bitcoin. So they're saying that Bear allegedly concealed from his accountant that he had received all the Bitcoins from his companies. And as a result, his return that they filed didn't report any capital gains related to this. So they're going to be pursuing him, and it appears what they're going to have to do is, prove that he owned those Bitcoins at the time that they're saying in 2017, and then just show that he didn't claim those on his tax return. If they've taken this far, it's likely they have these transactions tied to a wallet address already, and it's going to be a problem for him. or there may be more to this. I guess that's why everyone has their day in court. But this is going to be an interesting case. And if you recall, just last month I was covering the first pure tax evasion case that we saw with the Justice Department with Frank Alburn III, who basically inflated his cost basis and underreported his gains allegedly across several years of tax filings. So we'll see where this goes, but as you can see, we're slowly starting to see tax enforcement and headlines related to people not claiming their taxes picking up, and this is going to continue to do so. This is something I've been warning about. It's something even the IRS has foreshadowed themselves through some of their spokespeople. So I think we're only going to continue to see more and more of this. So I also want to encourage you to check out our website at camusocpa.com. Specifically in our blog section, I cover a lot of information there. Our most recent article is a tax guide for crypto tax and accounting. So this is great if you're looking to just get a general overview on what are going to be a lot of the tax implications and emerging tax trends that you need to watch out for this year, whether you're a business or an individual investor. I encourage you to read it. There's going to be a lot that we go over here, and there's so many moving pieces when it comes to crypto taxes, especially as we're starting to see these new requirements come into play and the tax audits picking up, that you want to make sure that you're out ahead of this and you're not overlooking any minor considerations or large considerations, and that's what this article will go over. So I think this is a great guide, and I encourage everybody to check this out. So lastly, I posted this case study to LinkedIn fairly recently, and basically what this one is going over is just navigating crypto accounting and making sure you select the right firm, because what I'm seeing is there's firms and CPAs out there that are deeply embedded in this space and have done thousands and thousands of hours of being in the trenches, doing the accounting, doing the tax analysis for all these various types of transactions and protocols. And then, there's firms that do see an opportunity in this space but haven't really cleared that full learning curve. And then there's firms that are working on clearing the learning curve, where maybe they're aware that, there is a learning curve that they have to get over. They're taking CPE courses, they're trying to become part of communities, but they still have a gap to clear. And, when you're on the side of being a taxpayer and having to assess these firms and work with them, it's very important that you implement a strong due diligence process, because what I'm seeing a lot is people that are coming to my firm, and this is what I go over in this case study. People are basically coming to my firm and saying, we've worked with X, Y, or Z firm, and they just have like horror stories from it. Either the work was complete, but a lot of the work is getting complete incorrectly, just with glaring issues, or there's just really no communication, or just a lot of red flags throughout the process that then leads them to questioning the integrity of the calculations and then having to basically get it all redone. So it's not easy to determine if you're just looking at my firm and a bunch of other firms, who does actually have the experience, and who is just basically marketing, and who's in between. So I sympathize with taxpayers. What I would pay attention to, though, are firms' due diligence processes. How deep is their knowledge related to accounting across blockchains and tracing transactions across block explorers versus just relying on maybe one software? And looking at the firm's background as well. The stronger background that they have in financial accounting and dealing with, the these types of transactions that we're going to see on the crypto side can go a long way in terms of, them implementing integrity throughout the accounting system and a proper due diligence process to gain accuracy. So another issue that you'll see a lot with firms, at least from what I hear, is non-responsiveness. And I think this goes hand in hand with, if there's engagements that get taken on where a firm gets in over their head, that's when you can start to see the non-responsiveness happen. So you just want to be very wary and make sure that you select the firm that you work with very carefully, because at the end of the day, this is the responsibility falls on you as a taxpayer, and you want to work with a firm that is taking the right tax positions as well. I have seen some wild tax positions taken on people's tax returns, and firms that are taking those tax positions are not only exposing that client to audit risk, but potentially their other clients to audit risk as well, because if that return gets audited and the IRS believes there's a pattern, it could lead to other returns getting audited. So, you really need to make sure that you're taking the time and assessing the right service provider. Some people understand this, and then other people think that we just need to get with a CPA that has any knowledge of this, and they're just going to plug this all into the software, and we're going to get out a result and then go and file this. That's not how this works. It's much more complicated than that. When we're working with these accounting softwares, they serve a great purpose for us, but there's many issues with the data that requires us to do a lot of manual work, and really focusing on the categorization, reconciliation, and due diligence process as we're going through a portfolio or through a company's accounting system. So just make sure that you're doing your due diligence when you're choosing firms, and that as you're going through the process with them, you're doing your own due diligence to ensure that what you're filing is accurate. Because again, at the end of the day, when you file your return, it's the ultimate responsibility is on you as the taxpayer. So those are most of the things that I had today. Now, if you are a digital asset investor that hasn't filed taxes for the current year, or maybe you've been neglecting taxes for many years, now is the time to speak with my firm. We can, take this spring and summer and get you up to date and into compliance, because as we're starting to see tax enforcement ramp up, you want to be in compliance. You don't want to be that lowest hanging fruit of non-reporters that the IRS appears to currently be focused on. Additionally, if you're a Web3 business and you're looking to get an accounting system established, maybe you just raised funds and you want to finally implement a proper accounting system, you're going to need to select your subledger, build out your chart of accounts and your wallet architecture, and maybe get caught up on some of the back accounting that you've neglected as you've gotten up to this point. Reach out to my team at Camuso CPA. This is a process that we want to be proactive in getting established, so we can get you financial reporting as soon as possible for decision-making purposes. And we'll be able to take you through that process from start to finish, and then assist you with it, maintaining it on a monthly basis. So reach out to my team if you need assistance on the accounting or tax side, if you're a digital asset investor or a Web3 business. Otherwise, stay tuned for future episodes where I'll be covering headlines as well as bringing on guests to give you more information when it comes to the regulatory side, accounting side, and tax side of Web3 and digital assets. So I hope you took value from this today, and I appreciate everybody that watched. Until next time, I'm Patrick Camuso.